What is up guys, Taiki here. Today I'd like to address the Soft Rug by Polywhale and what this generally means for DeFi, yield farms, and crypto in general. If you like the content, please like and subscribe and leave a comment in the comment section below. So let's get started. Alright, so today it was announced that, or I guess it wasn't really announced, like what happened was that Polywhale, the team Soft Rug. Soft Rug means the developers just leave the project, right? Because they just don't want to work on it anymore and etc. So Polywhale, it was actually the first yield farm that I actually participated in because they were the first, right, on Polygon. And flashback to my April 30th video, and you see that the price of KRILL is at $152, right? And this was a pretty good farm actually. I was like earning, consistently 400 to 600%. I think it lasted for like a few weeks, and I made some decent money. But obviously now it's trading at 14 cents. So this is what I always mean by don't marry a farm. Farm tokens usually trend to zero. They're designed to go to zero. And if you look at the article, the team said they were quitting due to bad tokenomics and poor market conditions. A farm with bad tokenomics, who would have thought, right? Who would have thought a farm would have bad tokenomics? And if you actually look at like the statement by the team, right, they're like, we quit because tokenomics didn't work out how we planned. Okay, like I guess minting an infinite amount of tokens, that doesn't really mean price goes up. Hard to fathom. Markets took a huge turn to the red side. I didn't even notice this typo, red side. Okay, well, yeah, because I always talk about, when the markets are bearish, right? Like when the market looks gross as it is right now, the risk tolerance is going to be pretty low. So this is one of the reasons why for the past month, in the past month, I haven't really participated in degen yield farms because market bearish, degen yield farms are less likely to perform. It doesn't mean that you can't make money, but that's the thing. Competition has been destroying us. Okay, so our product is bad. AVI rewards go down. Okay, like maybe they didn't plan for the AVI rewards going down. Personal health issue, like maybe too much McDonald's, and because I guess due to the above reasons, and people left, and I guess people lost money because they didn't really do the research, and then they're like attacking the team members. Okay, so this is a soft rug. A hard rug is when there's something malicious in the code and they can just take your money, right, that you stake. But a soft rug is something that you can't really control, right? It's just like if the developers leave, then the token goes to zero because there's no product, right? So that's what a soft rug is. And I was going to go back to, I also mentioned this in the live stream, right? Why I'm like focusing on safer farms. Where this tweet from Hedgehog, who I had a podcast with, when projects start rugging as they have recently, it's the equivalent of market selling tokens without regard for price, right? Because what Polywhale, like what the developers did was they sold the tokens that they had. I think it was like roughly $1 million, and they just wanted like no part with the project because they didn't really see a future for it. This is quite bearish and characteristic of subtle shift from bull to bear mentality. And he posted this June 5th, and I think he's pretty much right because with like the developers that make these yield farms, like they're not really in it to change the world, they're in it to make money. And as soon as these developers find out that this market isn't like primed to make money, they're just going to be like, all right, we're anonymous, we're just going to leave, and we're going to blame tokenomics, we're going to blame our personal health issues, whatever. I mean, I don't want to downplay that because they might actually be suffering from mental health issues, but that's generally what happens. And I put out this tweet earlier today about like a data point that suggests a shift from bull to bear. I mean, I'm just like reiterating what Hog said, where like soft rugs are pretty bearish for yield farms, right? Because I guess back in April when the markets were hot, the odds of the degen yield farms performing well were pretty high, right? Because everyone wants to like make more money. Money is flowing around everywhere. But when people are losing money, then these farms are less likely to succeed. So what's going to end up happening is, or this is my prediction, like the next new farm that comes out is more likely to be a soft rug than a farm 2 months ago. I'm not saying anything novel here, right? But that's just like how it's going to, that's just how it's going to be. And the way to avoid hard rugs, right? Hard rugs meaning like the developers just take your money outright, is looking at RugDoc, right? Had an interview with her, it was great. So generally you want to go into things with lower risk and not enter things with high risk. But RugDoc they can't predict whether the developers are going to leave or not, right? I mean, right, that's like more psychological. They can't really control human actions. They can look at the code, but they can't really like control how, like whether or not the developer leaves. So this is quite sad from like a yield farming perspective, but it's something that you should consider, and that should be something you consider into your, I guess, risk metric going forward. So I'm just focusing on safer farms, right? And when I think about yield farming, at the end of the day, I made this video about where is it? Like how I'll be yield farming in a potential bear market, and I just went over like, I guess the goal of farming is to essentially either stack your favorite coins, stack dollars so you can dollar cost average the bottom, or you can farm speculative positions. So obviously what I've been farming recently was accumulating Qi DAO, right? And I've been farming this like in mid-May, right? May 24th here. And I believe this is May 30th. I had almost 900 Qi tokens at 36 cents. And now Qi tokens were just below $3, and I have roughly 1,000 of them. So I decided to sell 3/4 of it. So I sold 750 Qi to buy more Bitcoin, right? I mean that's essentially what my plan was. I just want to accumulate more Bitcoin because Bitcoin is going to stand the test of time. While Qi DAO, well, I like the project, I like the coin, but I'm not going to marry the token because it can go to zero and I would not be surprised, right? And, I mean, I'm not like being bearish Qi DAO. Like I actually really like the team. They're always shipping products, but I hold no allegiance to the token. I just farmed this with dollars for the past, I guess in total, 3 to 4 weeks. And I accumulated essentially 2.2K of Bitcoin for free. And that's the idea of farming, right? My goal is to stack my favorite coins, right? So I farmed a speculative asset, Qi, when it was 30 cents, 36 cents. And once it goes to $3, I'm like, cool, I'm gonna buy Bitcoin with it, right? Like, so yeah, and I still hold 250, right? A quarter of my position, just because I think it could go up. It doesn't mean I think it. I mean, yeah, right. I just have a move bag. Once they roll out staking, I'll just stake it, and if it goes to zero, then whatever. I just took most profits anyways. But just capturing the upside, always protecting myself to the downside, and just like this is like generally the mindset I have for farming. And you always have to adjust to the market environment, right? Like who in their right minds is like buying farm tokens when Bitcoin is trading at 32.5K, right? So for me personally, I just want to accumulate more Bitcoin just because I think it'll outperform to the upside and downside. And like look, I mean, all these altcoins are down 10 to 20%. It's pretty brutal. So my focus is stacking Bitcoin, stacking Ethereum, and I mean, I've been farming for, let's see, let me go back to this tweet. I mean, I'm still a crypto primable, right? I mean, I'm making these videos like 3 to 5 times a week, but there's nothing wrong with farming stablecoins and dollar cost averaging slowly into your favorite assets. So I farmed Qi, dollar cost average into Bitcoin. I still have a pretty big stablecoin stack, so I'm gonna dollar cost average into Bitcoin, ETH, and maybe even like Aave or Sushi. I'm still thinking about it. Maybe provide liquidity to just generate those yields, but this is generally what I'm thinking, and this is how I'm like approaching the markets. Because market's bearish, farm with stablecoins. Because the entire thesis of my stablecoin farming thing since mid-May was, I think the markets are going to go sideways. It might go down a little. So who's going to outperform? It's the stablecoin farmers. And I think I've generally outperformed, right? And I've been transparent with like what I've been doing. So thank you guys for watching. If you like the content, please like and subscribe. Leave a comment in the comment section below. So yeah, thank you for watching.